Hey, how's it going, traders? In this video, I'm going to show you the side of the market that most traders won't show you, and that is the red days. In this market, it's all about transparency, and I find a lot of traders and influencers don't show their red days and lead a lot of their followers down the wrong path because red days are inevitable for traders. I get red days no matter how good you are trading. You're going to have those stinking red days, and unfortunately, bad news is they don't get any easier. So let's talk about what led to my failure today, day trading stocks. So, first up, why did I have a red day? Well, let's look at the overall NASDAQ. Had a super bad day today. Now, it was down from its highest point almost 4% in the day, which is absolutely crazy given how bad of a week it's had already. So the market was making lower lows, pretty volatile. I thought it was starting to confirm a little bit of reversal, then dumped back down again. So crazy day, and we weren't just red because the overall market was red. Yesterday, the market was even worse, down at its worst about 6% in the day, and we made $5,000. Well, that's because we short, meaning we bet that the stocks are going to go down. The further they go down, the more money we make. You see this on my live streams every single morning that I consider shorting some of these stocks, and it's something I considered doing this year. I'm surely glad I trained myself on how to properly short last year because shorting was something that I never really did, but it led to my success yesterday. But we're not going to talk about yesterday's success. We're talking about today's failure and what led to today's failure. Well, the first trade I took was TKLF. This stock was down, 90-something% the day before. And these gap fill plays are not my forte. I'm not the best at trading them, but they can sometimes be really good opportunities. So I saw that there was a former high here at 691, be exact. Let's pretend that's 691. And there's also a pre-market high at 649. So I said, all right, well, if it breaks 649, I'm going to take a partial position, only 25% of my overall position, and my big buy order. I had 15,000 share buy order. Excuse me, if it broke 7. Now, the reason why I thought that was so big was if it broke this move up, it would start to kind of gap fill, if you will, leading up to almost $10. So once market opened, I got halted, resumed out of that halt, hit 625 was looking good. I put my partial order in, again, only 25% of my overall order for the break of the pre-market high. The reason I did this was because I felt like it was a decent enough opportunity. Now, good thing I did not put my entire order here, or else it would have been a really bad trade. I told my my students this, that I'm not going to be putting a huge position here. Well, 5,000 shares really isn't that big of a position when you're trading with the account I am. Now, it broke the pre-market high at 649, hit 650, and I'm like, man, if this breaks 650, this is going to squeeze into another halt because it resumed at 580. If it went to 650, it'd be about 12% gain. It was going to get halted again. What happened? Tapped that psychological resistance line at 650 like we always see. And the second I saw that, I'm like, this is not going to break. So it tapped 650, didn't break, started to go down a little bit. Now, I usually give stocks 2 and 3 chances to break certain resistance lines, and it went back down to 630, back up to 640, 645. And I'm like, okay, well, I'm going to give it another shot here. Didn't break again, and as it started to fall down, I guess I could have stopped out a little bit sooner. I was seeing if it would maybe bounce off of 6 and then go back up. I think I was just being too hopeful because the second I saw it not break 650, I had a really good idea that this was going to be a red trade. Now, I locked in a partial loss at, well, a total loss, sorry, at $2,000, $2,250 loss on that trade. Now, my max loss for the day is $5,000. If I exceed $5,000, I have to shut everything down. I'm done trading. I cannot trade anymore. So I'm like, that's not even half my max loss. And I had a $5,000 day yesterday. I'm not done trading. Just because I had one redwood trade doesn't mean that I'm done on the day or anything like that. So one of my students brought Tesla to my attention. and I thought it was a pretty good deal. Now, it's kind of ironic because I was telling them that I don't usually buy for the break of wedges anymore. Why? Because there's a lot of discrepancies on what the wedge really is. Is the descending resistance line here? Is it there? The reason why I like to trade flat top breakouts is there's a clear resistance line at that level. Okay, it's 930. It doesn't matter. It's a flat top breakout. If it breaks that, it's going to soar. Descending resistance lines, don't always make the best opportunities. So I took a 100 share buy at 926 when it clearly broke and started to head upward. Now, there was a high of day at 928, and if it broke 928, not only would it have been breaking the high of day, making higher highs, but it also would have been a red to green move. So everything was kind of looking picture perfect. And in fact, I thought it was going to be a really good trade. It tapped 930 right here, almost broke that high of day. And then the second it tapped it, look at this red candle. Look at that wick. All the way down to 6, I think, or 9, what was my stop loss? 918. Ooh, 917.87. So lost a few dollars a share right there for another $800 loss. So total down just over $3,000 on the day. Now, hindsight, I don't want to get discouraged. I had a $5,000 day yesterday, and I gave back over half my profits for the week. I'm only up about $1,600 as opposed to $5,000. So it kind of sucks, right? Giving back a lot of your profit is never a good feeling. But what you learn as a trader is red days are inevitable, and what a mentor told me was think of it like paying your employees. It's kind of a cool way to put it in my brain. I'm paying my employees. If I own a business, I would have to do that anyway. Like a retail business or something, having to pay my employees. And today I paid my employees. So today was payday for them. I gave money back to the market. Tomorrow's a new day. Hopefully we'll have a green day. This is the third red day third red day I've had this month. I almost had a red day last Thursday, but we turned it around midday, and it actually ended up being like a $2,000 green day. So I've had a big red day like this at all this year so far. I think my second biggest, I had a pretty bad red day, almost $4,000 in the red, December 22nd. That was the only other red day that I've had of the size. Keep your green days bigger. Obviously, we had a $5,000 day Monday. We had a $15,000 day the last Monday. So keep your green days big and your red days small, and that's all we're doing. Hopefully you guys enjoyed the recap. Please leave in the comments if you have any questions on the reasons why I took these trades, any questions in my thought process. The last thing was you don't want to force trades just to get back at the market and try to get green on the day. I see so many traders say, once I hit green, I'll be done trading. And all they do is snowball that loss. It's one of the first lessons in the Profit Chasers Pro course. Do not snowball your loss. It's such a common thing for beginner traders to do. So I advise against, once you have a big red trade, walk away. Just please shut down your TOS, shut down whatever trading platform you have, and just walk away. It's as easy as that, so you don't compound your loss. So if you guys want to see more of these breakdowns, leave a like and also subscribe. It helps motivate me to make more videos like this. If you guys want to trade with me live each and every single morning, click the first link in my bio, join the Discord, and if you want to go the next step and actually be on my team and have one-on-one lessons, head over to profitchasers.net. Again, that is the second link. Alrighty guys, I'll see you in the very next PC video. Peace, guys.